I can absolutely rewrite this into fully original wording while keeping the same structure and meaning, and I will replace Milena with Edward. One limitation: inside this chat, I don't have a reliable way to verify and exact our word-for-word match to the original script's total word count. I can keep it the same length and pacing, and if you paste the original word count from Word, Chalk, Google Docs, I can do a second pass to make the rewritten version match that number exactly. Here is the fully rewritten, copyright-free version in original wording. Same structure, same key points, not shortened in content or flow. Senate pushes new Social Security changes 2026. What every retiree must know. A YouTube script by Edward, Senior Policy Analyst, estimated. Runtime 16 to 18 minutes. Imagine this. It's a regular Tuesday morning. Margaret is 68. She's a retired public school teacher. She's sitting at the kitchen table, coffee in hand. She opens her bank account on her tablet, just like she does every month, and suddenly she freezes. Her Social Security deposit is smaller than normal, not by a couple of dollars, by hundreds. She refreshes the screen, she checks again, same amount. Now her chest feels tight, her mind starts racing. Did I mess something up? Did they reduce my check? Is this connected to what I heard on the news about Congress changing Social Security? She calls her daughter. Her daughter has no idea. She goes online. She finds 10 different explanations. None of them match. Some are alarming, some are confusing, none are simple. Margaret taught for 28 years. She contributed to her state pension. She followed the rules. But no one ever explained one quiet rule, one that had been shaving down her Social Security payment for years. And no one told her that in January 2025, that rule was finally removed, which could mean Margaret is owed money right now, money she still hasn't received. If you're watching this, whether you're retired, married to a retiree, or helping your mom or dad figure out benefits, I want you to pause and breathe. You're exactly where you need to be. My name is Edward. I'm a senior policy analyst and a retirement finance expert. And for years, I've helped retirees untangle the rules that shape Social Security, pensions, Medicare costs, and long-term financial stability. In this video, I'm going to explain what is truly happening with Social Security in 2025 and what's being discussed as we move toward 2026. I'll tell you what lawmakers are debating, and even more importantly, what has already been signed into law that could change your monthly deposit starting now. We're going to separate real policy from scary headlines, and I'll give you 3 specific actions you can take this week to protect your benefits. But please stay with me until the end, because there's one mistake retirees are making right now, and for some people, it's costing thousands of dollars. Let's begin. Let me tell you about Robert. Robert is 67. He retired 3 years ago after 31 years working as a firefighter in Ohio. He was proud of what he did. He helped people. He earned his pension. After retirement, his state firefighter pension started around $2,100 per month. He also applied for Social Security based on his wife's work record because his wife, Linda, spent more than 25 years in private sector jobs and paid Social Security taxes throughout her career. But when Robert's spousal benefit was finally processed, it was barely anything. He was told it had been reduced because of a rule called the Government Pension Offset, the GPO. Robert had never even heard those words before. He accepted the amount SSA gave him. He told himself they calculated it. It must be correct. What choice do I have? So Robert and Linda reworked their retirement budget. They tightened spending. It wasn't easy, but they got by. Then in early 2025, Robert's neighbor, a retired police officer, called him, almost shouting with excitement. Did you hear? They got rid of the GPO. They got rid of the WEP. New law. We're getting back pay. Robert didn't know what to think. He remembered hearing something brief on the news, but he couldn't tell if it applied to him. He didn't know who to contact, so he waited. He assumed SSA would reach out. He expected a letter. He believed it would all be fixed automatically. Weeks went by, then more weeks, then months. Robert took the silence as a sign that everything was being handled. But here's what Robert didn't realize. Some people, especially spouses and survivors who were denied benefits under the GPO in the past, may need to take action themselves. They may need to file or file again with SSA. Every month Robert waited, he potentially left money on the table. By the time his neighbor finally pushed him to call SSA, Robert had delayed receiving the corrected amount for months, and he lost valuable time getting his case resolved as quickly as possible. Robert made a completely understandable mistake. He assumed the system would automatically find him. But when a new law affects more than 4 million people, the system can get overwhelmed. And if you're in Robert's shoes, waiting can be expensive. So now I'm going to walk you through what you need to know, based only on official sources. Now let's talk facts. Verified facts, only from official government sources. No internet rumors, no guesswork, no partisan drama. We'll start with what has already changed. What just became law? The Social Security Fairness Act. On January 5th, 2025, President Biden signed the Social Security Fairness Act into law. It is Public Law 118-310. This is not a maybe. It's not a proposal. It is enacted law, and it delivers two major changes. Change 1, the windfall elimination provision eliminated. The WEP was a rule that lowered Social Security benefits for people who also received a pension from work that did not pay into Social Security. Think about who often falls into that category. Teachers in states such as California, Texas, and Massachusetts. Firefighters and police officers who paid into separate pension systems. Certain federal employees hired before 1984. State and local government workers nationwide. If you worked in one of these jobs and also earned some Social Security credits through other work, the WEP could quietly reduce your Social Security check month after month. About 3.2 million Americans were affected by the WEP. As of January 2025, the WEP is gone. Change 2. The government pension offset eliminated. In many cases, the GPO was even more damaging. It reduced or wiped out entirely spousal and survivor Social Security benefits for people receiving a government pension from a job not covered by Social Security. So if you were a spouse or a widow or widower eligible for Social Security through your husband or wife, but you also had a non-covered government pension, the GPO could have erased that spousal or survivor benefit. Roughly 800,000 spouses and survivors were impacted by the GPO. As of January 2025, the GPO is also gone. Now, the retroactive back pay. This part is extremely important. The law requires SSA to pay retroactive benefits going back to January 2024. Yes, January 2024. Not the date the bill was signed. The retroactivity goes back to January 2024. SSA began issuing retroactive payments in February 2025. The average lump sum retroactive payment is about $6,710 per affected beneficiary. That's SSA's own reported average. And moving forward, affected retirees are seeing an average increase of about $360 per month. For affected spouses and survivors, the average increase is about $700 per month. These are meaningful amounts. This is real money owed to real people who spent decades working. Now, what is the Senate discussing for 2026? This is where I want to slow down, because this is where confusion spreads fast. There's a lot of noise, and I do not want you making retirement decisions based on noise. Here's the reality. There are multiple Social Security proposals being debated in Congress. One is often referred to as the Social Security 2100 Act. It has been introduced by Representative John Larson, and different versions have shown up over the years. As of mid-2025, it has not become law. It remains in committee discussions. It is not enacted. Some proposals inside it include raising benefits for Social Security recipients, changing the COLA calculation from CPIW to CPIE, the Consumer Price Index for the elderly, which could potentially lead to larger annual adjustments for retirees, raising the payroll tax cap so higher earners contribute more. These ideas are being discussed. They are not guarantees. They could pass, change, or fail. I will keep you updated as the facts change, but right now, do not plan your finances around bills that have not passed. What about the 2026 COLA? I know this question is on many minds. Here's the straight answer. The 2026 COLA has not been officially announced. The official announcement comes in October 2025, as it does every year. For 2025, COLA was 2.5%, bringing the average monthly retirement benefit to about $1,276. Some early nonpartisan estimates suggest 2026 COLA might be somewhere around 2.3% to 2.6%. But that is only an estimate. It is not official. Anyone claiming they know the exact 2026 COLA today is either guessing or trying to get your attention. The official COLA source is ssa.gov. What about Social Security? Running out. I hear this worry all the time, so let's address it clearly. Every year, the Social Security Board of Trustees releases an annual report. In the 2024 report, they project the OASI Trust Fund could be depleted by 2033. That sounds frightening, but here's what it truly means. It does not mean Social Security vanishes in 2033. It does not mean checks drop to zero. It means this. If Congress does nothing between now and 2033, SSA would be able to pay about 79% of scheduled benefits, roughly 79 cents on the dollar. Why? Because Social Security would still collect payroll tax revenue from current workers, but it would no longer have the trust fund reserves to cover full scheduled benefits. And this matters. Congress has solved this kind of problem before. In 1983, Social Security faced a very similar crisis, and Congress acted. Most policy experts expect Congress will act again before 2033. And that is exactly why today's Senate debates matter, because decisions made now shape the long-term stability of the program. The tax trap. Many retirees overlook. Now, I want to cover something that is not being talked about nearly enough, and it can hit retirees hard during tax season. If you received a retroactive lump sum payment from SSA because of the new Fairness Act, that money may be taxable. According to IRS Publication 915, up to 50% of your Social Security benefits may be taxable if your combined income is above $25,000 as a single filer or $32,000 if married filing jointly. Up to 85% may be taxable if your combined income is above $34,000 single or $44,000 married filing jointly. Now, here is the key problem. If you received roughly $6,710 as a lump sum in early 2025, it could push you into a higher tax bracket. It could raise the taxable portion of your Social Security for 2025. And here's an even bigger issue that many retirees don't see coming. Medicare sets Part B and Part D premiums using your income from 2 years earlier. So a large one-time payment in 2025 could trigger higher Medicare premium surcharges, IRMA, in 2027. But there's good news. The IRS allows a legal option called the lump sum election method. It may let you calculate taxes as if that back pay had been received in the year it should have been paid, rather than dumping the entire amount into 2025 income. You can use Form SSA 1099 along with IRS Publication 915 to access that method. And if Medicare premiums rise because of this one-time payment, you can appeal the IRMA determination using SSA Form SSA 44. These are protections you have under the rules. Use them. The risk of claiming too early before we move into the action plan, I need to address one last issue. I've talked with many seniors thinking about claiming Social Security at 62 because they fear the program will be reduced or changed. I understand the anxiety. Truly. But I need you to hear this. If you claim at 62, your benefit can be permanently reduced by up to 30%. That reduction doesn't disappear when you reach 67, it stays for the rest of your life. And it can also reduce what your spouse may receive later as a survivor benefit. But if you delay beyond your full retirement age, you earn delayed retirement credits. Your benefit grows by 8% per year up to age 70. That is a guaranteed 8% annual increase. You won't find that kind of certainty in most places. Making a rushed decision because of proposals that haven't even become law can cost you tens of thousands of dollars over your lifetime. Please make this choice using verified facts, not fear. Okay, now you have the real information. Here are 3 concrete steps you can take this week, not later, this week. Step 1. Sign into your My Social Security account at ssa.gov and review your benefit information. This is the #1 step. Go to ssa.gov My Account. If you don't have an account, create one. It usually takes about 10 minutes. Once you're logged in, review your benefit statement. Look at your full earnings record and confirm it's correct. If you're a former teacher, firefighter, police officer, federal employee hired before 1984, or a state or local government worker, check whether your benefit has been recalculated now that the WEP has been eliminated. If you're a spouse or survivor who had benefits reduced or denied under the GPO, check whether your benefit has been updated. If you don't see a change and you believe you qualify, don't sit back and wait for SSA to find you. Call SSA at 1-800-772-1213 or go to your local SSA office. Some people, especially surviving spouses who were denied under the GPO, may need to file or refile an application to start receiving the corrected amount. Don't assume it will happen automatically. Step 2. Go over your 2025 taxes, especially if you received a retroactive lump sum. Get your Form SSA 1099. SSA mails it in January. You can also get it through your My Social Security account online. Take that form to a qualified tax professional, or at minimum, read IRS Publication 915 carefully yourself. Ask specifically about the lump sum election method. It's a legal IRS option that can reduce the tax hit from the retroactive payment. Also, if you think this one-time payment may increase your Medicare premiums in 2027, ask your tax professional about using SSA Form SSA 44 to appeal an IRMA surcharge. You do have rights here, but you have to use them. No one will automatically do it for you. Step 3. Don't make major claiming decisions based on proposals that are not law yet. If you're nearing 62, 65, 67, or 70, don't let headlines about what the Senate might do pressure you into claiming too soon. The Social Security 2100 Act is still in committee. It has not passed. The 2026 COLA is not official yet. No new across-the-board benefit increase is guaranteed beyond what has already been enacted. So here's what to do instead. Use the official retirement estimator tools on ssa.gov. Compare your numbers at 62, 67, and 70. Look at the difference for your situation. If you're married, also consider survivor benefits, because your timing can affect your spouse's future income. And if you want personal guidance, contact your state health insurance assistance program. SHIP. It's free, it's unbiased, and it's available in every state through medicare.gov/SHIP or benefits.gov. Before we wrap up, I need to tell you something I feel strongly about. YouTube can be a great resource, and I'm truly glad you're here. But YouTube notifications are not dependable enough for information that impacts your money, your benefits, and your retirement. YouTube might not show you a new video. An algorithm can decide the update isn't important, and while that's happening, a deadline can pass. A form can go unsubmitted, a payment can go unclaimed. That is not okay. That's why we created the Global Senior Alerts official WhatsApp channel. It's a free channel where we send real-time alerts the moment something changes. New Social Security rules, COLA announcements, Medicare updates, pension changes, IRS deadlines, banking rules that affect seniors, TSA travel rule changes. You'll hear it faster than most people, and when you join, you can download our free Senior Benefits Protection Guide. That guide covers the key forms you need to know, including SSA 44, the SSA 1099 lump sum election approach, and SSA appeal forms. The correct phone numbers and official websites for SSA, Medicare, SHIP, and other agencies. A plain language checklist you can review with a family member so nothing slips through the cracks. The link to join the WhatsApp channel is right below this video in the description. It takes about 30 seconds, and it may be the most valuable 30 seconds you spend this week. Let me leave you with this. You earned these benefits. You contributed to this system for decades. Every dollar matters, and you deserve what you are entitled to receive. Social Security rules are complex, they change, they include hidden traps, and the system doesn't always make it obvious when a change is actually in your favor. That's why I'm here. My job, my entire mission on this channel, is to make sure you are not the last person to find out. You're not alone. Remember Margaret, the retired teacher from the beginning? She eventually learned about the Social Security Fairness Act. She contacted SSA. She filed what was needed. Her benefit was corrected, and she received her retroactive back pay. It took effort. It took the right steps, but she got what she was owed, and you can too. If this video helped you, please share it with a friend, a neighbor, a relative, anyone who is retired or close to retirement. Millions of people need this information, and they don't know where to get it. Be the person who passes it forward. I'll see you in the next video. And until then, stay informed, stay protected, and know your rights. I'm Edward, and this channel is here for you.